I want 50x. Then I'm kind of like, well, now you're asking me to give you a gamble, an opportunity to gamble. That's what you're asking me for.
What's up, world, and welcome to another episode of the Super Investor Show. My name's Sean Harry, your host, and if you're an investor like me who loves learning from other people's mistakes instead of your own, you're in the right place. Now, talking about mistakes and crypto, if you make money in this space, you'll then find out you now have a new problem, right? New problems, not different ones. And that is taxes, right? Wherever you live in the world, it's not a different problem. Everyone's had to deal with taxes. And more importantly, if you're in crypto, the fear and anxiety around what do you do now once you've made this money because you've got a new problem. Well, I have someone from the UK who's going to be able to give not financial advice, but an insight into what he does and why he is leading arguably the #1 accounting service in the UK. And I hope he's going to expand that internationally. Although when I bring him up, I'm sure he'll tell us more. And when I asked Joe, the CEO of Nephos and MYNA Accounting, he told me his proudest moment was actually watching the implosion of the crypto market in 2020 on the sideline. And now being part of the game, because it is a game, right? We're all trying to figure this out, that he's proud that he really understands what this space is as he's seen it, I guess, from a non-emotional standpoint. So please put your hands together and welcome our guest, Joe David.
Hello, Jordan.
And my accountant, may I preface?
I didn't know if we were going there or not.
I mean, you're not my personal accountant, but I'm part of your team, and your team. This is a beautiful plug that he hasn't paid me for yet. They're helping us get our dream home in a couple of years' time. They're keeping us out of prison. So thank you, Joe, for you and your team and what you do.
Your dream home isn't prison, no?
No, it isn't.
Because we can do that really easily.
Oh man, what a way to start. So let's get some credibility back for you, Joe.
Yeah.
How would you define yourself, buddy?
Yeah, I think for me, and I don't like the word entrepreneur as such because it gets used quite a lot. But for me, I've always been an entrepreneurial person, and I've always needed to have purpose. So I didn't really get on at school because I didn't see the purpose of what I was doing. And as soon as I started to see the purpose, I really kind of kicked on and things like that. And it's kind of the same for crypto. I sat on the sidelines, as you mentioned on the intro, and I kind of watched the big rise and then the steep fall back down, and it's made me really positive about how the future of crypto is, and also how to understand the waves and the cycles and the ups and the downs, if you like, of the crypto world. So yeah, that for me is a summary of me.
And that arguably would be a superpower for many people. Right. And as you know, I'll say that's a weakness because most people are like, oh, I missed that moment. But you're actually saying, look, although you missed being part, that you weren't maybe invested as such, you were fortunate to witness it and take the lessons without taking the losses. Would that be right?
Yeah, and I guess in a way, the lucky thing for us is we're doing tax returns day in, day out for lots of different individuals that are investing in the markets, and so we get to see some really big wins, and unfortunately for some people, we get to see some losses as well. So we do kind of get that insider insight that you might not get not being in the world that we're in. So yeah, wow. It's cool.
That's something I never thought about, right? Being an accountant, and not that you can ever make this information public, right? About what your clients have, the lessons they've learned or the lessons you've told them. Although I know you have a Discord where people can, if they would want to share, learn from. But you have access, to arguably the greatest data out there, which is individual mistakes in this market and not just the wins people share online. Without going too much detail, Joe, I was going to say, would you like to add?
Yeah. It's kind of like I liken it to the betting gambling arena, right? Where you sit in the pub with your mates and you have a chat, and or you message your friends on a WhatsApp group or a Telegram group, whatever, and you send them the screenshot of the £200 win you just did on on a football game or whatever. But what you didn't show them was the day before you losing £500 on two other games, because there's no fun in sharing the big loss. There's just the fun in the big win, right? So everybody looks at that and goes, wow, big win, great, what a guy, etc., etc. But underneath that, there's more to it. And I guess for us, we've got that same unique insight where we don't just see the wins, we also do see the losses. But the positive to that is when we do see the wins, we know that we're seeing real wins, because we can also see if that was just one peak or whether that actually carried on throughout their investing cycle. So yeah, we get an insight, if you like, that you wouldn't normally get. And as you say, we don't share it, we don't talk to anyone about it. And I wouldn't even say that we necessarily use that information for our own benefit as such, because typically we're looking at it after the event, so there's not a great deal we can do, but it does give us an insight into people's mindsets when they're trading, and having those conversations with people about why they did what they did, if that makes sense.
100%. And at the end of the day, you have your finger on the pulse, right? Because it's not just accounting law that you need to keep up with. It's regulatory, full stop, and in the UK, better or for worse, I know we have some guidelines around it that is open to interpretation. Is that correct, Joe?
Yeah, I think that's the politically correct way to say it. Yeah, they're definitely open for interpretation. But the I guess non-politically correct way to say it is that sometimes just because HMRC or the FCA or what have you put out regulatory guidance or tax guidance, it doesn't necessarily mean it's 100% right. So if we've got the ability to look into what has been said and actually then relate that to kind of real life, in terms of people's actual kind of accounts and things, we can push back to people like HMRC, etc., and say, look, we don't believe this is right for this reason, and try and make change. That doesn't mean we'll always get change, but it gives us the opportunity to try and make change if we can.
I'm glad, because I didn't know you could do that. So if we are in that situation, it's lovely to know what they then maybe come back with. We have an opportunity to change the outcome. Now, before we get into knowing who you are a little bit more as an investor, I really want to, of course, tell the world why, because I feel like it's a disservice, because every investor has this fear, and if they don't, you probably should. What's the problem you're solving? And more importantly, how are you doing it?
Yeah, I mean, for us as a business, the problem we're solving is that we're supporting our clients with that additional kind of liability that they may or may not have realized that came about. So, my way of looking at it is, if you're an investor and you do X, Y, and Z trade, and you make £100,000 or dollars, what have you, you sit there and you think, great, I'll roll that onto the next one because I've made 100 grand. Fantastic. What you're not looking at in the background is that there's a potential tax liability on that transaction. And when we come down the line and we say, there's tax here, and you've been trading here, there, and everywhere with that money, the chances are you haven't put aside some cash to cover that bill. So we therefore don't feel, as an investor, you have the full picture. So for us, what we want to try and do is give people a better oversight, if you like, into their kind of actual P&L, taking out things like tax and whatnot, because that gives people a much better, like I say, view on what their next move might be. If I can add quickly as well, we saw the FTX situation last year, and we've had clients that thought they had put their tax money to one side, put it on somewhere like FTX, hadn't touched it, and then unfortunately that exchange is no longer here, and their tax money is now kind of gone, and they've got to kind of negotiate with HMRC and things like that. So the nice thing again is if people were aware of the situation a bit sooner, then maybe they can act in a slightly different way, is how we're trying to approach it.
Powerful. The saying is prevention is better than cure, right? And that does mean
absolutely.
It's not sexy, the conversations you're having, right? Because it's not making people money. In fact, it's probably keeping you money.
And I think the key thing though is how you spin that, Jordan. And sorry to jump in, but it's
point.
Our view isn't, obviously we're asking people to pay money to the government, and whether people like that or not, that's on them. But eventually you are going to get found, right? Eventually somebody is going to come knocking on the door. So first of all, do you want to sleep at night? Knowing that the money you've made is in your pocket and it can't be taken away from anyone. And secondly, if you're making investment decisions, because this is an investment show at the end of the day, if you're making investment decisions, you wouldn't make business decisions in a traditional kind of business without understanding the full facts of your income, your costs, any tax liabilities, etc. You would make investment decisions in a business based on those facts. So why are people not doing that in their personal investing space with their kind of own money or whatever it may be? So that's what we're trying to do, is educate that piece around. You need to factor this in because it does come into play. But on the flip side, if you've got things like losses, etc., we can make sure we maximize those in the right place and at the right time.
I'm not going to ask any more questions because I'm going to give way too much of your source. So I know there'll be one final question which people at home will be asking, and it's that typical UK-US split, which mainly my audience is. And as we know with crypto, we all feel like the world revolves around the US, and maybe at times it does. Who do you serve? Is it is it jurisdiction specific? Is it geographical?
So personal perspective, so personal tax, we are UK specific because we have to focus on the UK rules and guidelines at this stage. We are, as we briefly talked about before we came on air, we are hoping to expand internationally. In terms of business, so if you've got a crypto business or any kind of business, but obviously typically a crypto business, we can help internationally with that. But with the personal investment side of things, UK.
Okay, good to know. So if someone who is part of a company that accepts or sends crypto payments, they could reach out and work with you. Is that correct?
Yep.
Lovely. Well, I'm sorry to all the other individual investors who aren't in the UK, but please stick around because you're going to learn at least something that will make you 1% better. So Joe, let's jump into one of the two questions we ask on the show. And that always starts with your strength. So what would you say your superpower is as an investor?
Yeah, I think for me, the core strength that I've got is I've been experiencing business for a long time. I've been looking at how businesses perform, what makes a good investment, what makes a bad investment from a business perspective, and being able to flip that into then crypto and other investing. Because ultimately, unless hopefully the SEC don't listen to this, but ultimately we are looking at investing in a company / project, right? That's what you're doing when you invest in. I won't use the SEC one, but if you invest in Ethereum or Bitcoin or what have you, you're investing in that because of the project. So you've got to look at the fundamentals. And I think for me, the superpower that I have is that because I've learned my trade as an accountant, I've seen an unbelievable amount of wins and an unbelievable amount of losses in both personal and business sense, that I've actually got a significant amount more knowledge because of that. Than I would have had if I had just, become, another job that doesn't get that insight, if that makes sense. So I think for me, the superpower is having that insight that others wouldn't have because of my job and what I do.
Fascinating. Now, I'm sure you're not advocating that if you want to be a good investor, you have to start an accounting firm. But for the majority of us watching and listening right now who aren't working at an accounting firm, who have a client who deals with crypto, what would you say is the closest thing we could do to get access to those lessons that you found being on the inside? Is there any websites that you go to and you use to learn all this data from?
Yeah, I think a lot of the fundamentals are around understanding the basics of the underlying kind of business or asset or protocol that you're investing in, right? You wouldn't invest in a stock, Apple or Tesla or whatever without knowing who the CEO was, for example. So why do people feel in crypto it's okay and safe to invest in a project where you have no idea who the CEO is, for example? All you can see is an avatar online. So I think the first thing is the basics. Think about it logically. What can you see? What is jumping out at you as a red flag, or what's jumping out at you as that looks really positive, and I can take that away. So I'd say that's the first thing. The second thing is that someone's trying to hack into my office at the same time as I'm talking.
You don't seem worried.
I locked the door. I locked the door so no one would come in, and they're just banging the door. Anyway, sorry. Going back to the point is then I would then use something like YouTube. Understand the basics of accounting. And by accounting, I mean just understand the numbers. How do they work? What do they mean? When people talk about these things, what do those fundamental words mean? Do you know what I mean? And I know that sounds obvious, but if you can understand the fundamental basic words that are being used, it doesn't sound like a foreign language, and therefore you pick it up and you can take that on board.
I think there's a lesson within what you were sharing just there, and please let me know if I'm off, which is do not trust your accountant 100%. I'm not saying, Joe, of course, I don't trust your team 100%, but it's a case of, okay, maybe I can reframe that. Don't trust them 100% and not do your own research, in the sense, and God bless Sophie, who's part of your team, right? I ask her probably a question every month, right? And it's not always applicable for the Discord. It's more something quite personal, right? Yep. But your team help educate me enough so that when you say, Jordan, we're doing this, I know why. And if I don't know why, I ask. And I'm sure you've heard of it. And the most recent example is, for example, Usain Bolt. Have you heard about Usain Bolt recently?
Not recently.
Okay. So Usain Bolt, of course, taking everyone's mind back, the world's fastest man, right? He's been retired for so long, but he's been doing fantastic in the business world. And I believe he made north of $12 million US. Put that money, that was his retirement money for his family. Financial advice or not, he put that all into an investment bank that then invested his retirement pot, right? And it turned out, air quotes, it was a scam. The bottom line is the money was lost and wasn't able to get it back. I think there was something like $10,000 US left. Now, we only know as much as the reports share. If we sat down with Bolt right now, and maybe he did meet with them weekly and he did really find out all the inner workings. However, from what the reports have stated, he handed it off to people in Jamaica who he trusted, and, respect to him for reinvesting back in his country. But I think there's a lesson there for all of us. We've heard about celebrities who have delegated their money to someone they trust, and it's not there when they need it. What question maybe there's 3 questions, Joe, and I'll give you some time to think about these. Do you think people should be asking their accountant to get a better understanding of what they're doing with their money?
Yeah, that's a really interesting one, and I do want to come back in a minute and touch on the not asking enough questions and another kind of recent, or not less recent, but something that's come up. But I think when you're, like you say, you should. I was wondering where you were going with the "don't trust your accountant" thing, but you won me back, so you're all good. We're all good. Like you say, it's not so much about not trusting your accountant. It's more about not assuming that everything they say is right and not needing any knowledge to back up that, So I think for me is I would always ask when you're presented with any kind of numbers, I would always ask how and where did these come from, unless you look at it and you go, do you know what, that's perfectly exactly what I was expecting. And but I would still always ask, I would always say, can you show me the backup to this? Can you run off a report that shows me the individual assets, for example, that I've got a gain and loss on, or what have you, right? if we're showing a 20,000 gain, we should be able to show you a report that tells you where those gains have come from, right?
Yeah.
So that's the first thing I would say. Yes, you can sense check it. You can have a look at it. Then I would say if there's a 20,000 gain and a tax bill on that, the next thing I would say is, how is the tax derived? What is and you don't need to be an expert. You don't need to know everything there is to know about tax. You just need to know the fundamentals. I've made 20K. So I can prepare myself for the future. How have you come to that figure, and what should I prepare myself for the future? And then finally, I would kind of say the last thing you want to know is, how can you potentially do something different in the future to mitigate that liability? So that, is that you shouldn't have sold that asset until after you sold it on the 4th of April and the tax year ends on the 5th. So you should have sold it on the 6th, right? Something like that. Is there anything I can do as an individual that can improve my position in the future? Now, sometimes the answer to that might be, to be honest, no. You made 100 grand, you bought an asset, you sold it for 100 grand more. Not a great deal you can do about that. There's a tax bill to pay. But why wouldn't you want to understand that? So I'd say, ask why and understand the fundamentals. Try and understand an element of where the tax is derived from, so that can help your decision making in the future. And then finally, is there anything you can do to mitigate that as an investor in the future?
Powerful. And those 3 questions, and you even said it yourself, you don't have to be an expert,
No.
So don't feel that if you work with an accountant now, or you're thinking about it, that you have to learn all the nuts and bolts, because chances are that you're probably never going to be able to.
We spend years training, so
unless that's a career,
but in the same way, go on, sorry.
Unless that's a career someone wants to go into, but
indeed, yeah. But I say the same people to good friends of mine who are builders or plumbers or whatever, and they say, I could never do what you do, and I say, maybe not, but I could never do what you do. So it doesn't make anyone better or worse than the other person. We've all got our own skills in our own areas, and you shouldn't want to be an expert in everything, because in my opinion, you will then fail at a lot of those things, because it's impossible to be an expert in everything. So, pick and choose the information that you think is valuable, and try and understand how you can better those decisions in the future is the key for me.
Definitely. And as an ending note, before we take a segue onto what makes you not so good as an investor, which is the main takeaway is, if your accountant or the firm push back against you asking questions, I think that's a red flag. Would you say, Joe?
100%. It shouldn't be difficult for anybody to provide you with information. And this actually touches back on the other point I was going to make, which I've been watching on Netflix, the Bernie Madoff documentary. If you haven't watched it, Jordan, I would recommend having a watch of it. I'm sure you've heard of Bernie Madoff and what happened. But for those that don't know, he ran a Ponzi scheme effectively for, I think it was best part of like 40 odd years and things like that. Wow. And do you know why he was able to do that for so long? Because people didn't ask enough questions. People didn't ask the questions that they probably in their head were thinking. And when they did, and they either got pushed back, they didn't jump on those red flags like we just talked about, or they didn't look deep enough. He said, here's a piece of paper. And they went, oh, if he's giving me the piece of paper, it must be true, because he wouldn't give it to me if it was a lie. So it's again, it's kind of that,
blind faith, maybe.
Yeah, but also if you're committing a crime or something, people go, oh, you wouldn't do it on your own doorstep, or you wouldn't do it in front of someone, or because, whereas actually that's the best place to hide is in plain sight, they say. Do you know what I mean? Because people don't expect you to lie to their face. So I think that's the other thing, is ask those questions. Don't be surprised if you don't get an answer, but that should be a red flag. But secondly, if you do get an answer, make sure you don't just go, great, I got an answer, and file it away. Actually take the time and effort to look into it, is what I would say.
Beautiful. Prepare your team. I'll be doing the same. Thank you for that, Joe, honestly. Now, we're going to move on to our next topic of the show as we wrap this up, which is, we've talked about what's made you so great up till now as an investor. But again, it's the purpose of the show, to make people realize you are just human. So what would you say was a weakness, or maybe still is a weakness, when it comes to investing?
So my biggest weakness, and this was an easy one actually for me, is being too emotional. I'm a very emotional person in everything I do. I'm very passionate about success and growing my business and empowering my team and all these sorts of things, like super, super passionate. But what that also makes me is super emotional in my investment decisions, in my, and by that, what I mean is I will stay in a deal for too long, or I will invest in an opportunity because they're a client and I want to support them without actually looking at the fundamentals, and then the money isn't quite where it needs to be, and things like that. So that's my biggest weakness, is I take too much of an emotional view on things, and I get too emotionally attached to transactions, when actually I've learned over time that sometimes you got to take the hit, sometimes you got to take the L, as they say. You got to say, look, I lost that one. That was a bad one. I move on and I go to the next one. It's better to, take something and go again, than to stay in for too long because you were too emotionally attached to jump out. So that for me is, one of those things that you could argue is a strength and a weakness, as we would talk about in job interviews. Always give a weakness that's also a strength type thing. And it is a strength in business. It's a strength in business that I'm super passionate and take every client that doesn't want to work with us, I take that personally and all those bits and pieces. But you've got to try and separate that, especially in your investment decisions, I believe.
It's a theme that has come up multiple times on the show, whether people have said it outright or it's been weaved in, on both ends, like you just said. Some people have come on saying my emotions have made me the great investor I am today because I had conviction about the project. And I actually do believe that just being logical isn't always going to be the path to making the most money in this space. So actually, there needs to be an element of conviction and unseen faith, because you have, again, as an investor, you have to invest before these things have actually manifested. And I'm sure,
I think you're
Joe,
right.
like you said, please go on.
Sorry, mate. But I think you're 100% right. You have to have an element of risk. You have to have an element of a gamble. You can't look at every single deal and say, do the numbers stack up in front of me today? Otherwise, I'm not putting the money in, because that isn't where you get the big wins, right? And you might, and you could, if we took the kind of current market and we looked at, if people say to me now, where should I invest my money if I'm looking at crypto? And obviously, I'm not an investment advisor or anything like that, but my thing would be, if you don't want to look into anything and you just want to put some money in crypto, so you're in crypto, then typically you would go in a Bitcoin, right? Because there's the fundamentals are there. It's stood the test of time. It's probably going to be, if crypto survives, Bitcoin is probably going to survive, right? I think we would all agree. So that for me is a kind of no-brainer, if you like. Now, if somebody says, oh, but that's only going to go up 2-3x or whatever over the next 12, 24, 36 months, whatever it be, I want 50x. And I'm kind of like, well, now you're asking me to give you a gamble, an opportunity to gamble. That's what you're asking me for. So that for me is like you say, what do you want from your investment decision? Do you want pretty secure, pretty safe, 2-3x over the next 2 years, whatever? Yeah. Or do you want to go 50x? And if you want to go 50x, you've got to take a punt. So, I do agree with you that you can't always fundamental, but it depends on the decision you're making and the makeup of that decision, I would say.
When it comes to those emotions that you say have kept you in maybe an investment too long, what, looking back now, where's the kind of trigger? Have you seen like a common theme that has led to those? And I'll kind of go a little bit deeper on that. Have you noticed it's times in your life where you have needed the money, so there's a sense of urgency, right? A sense of a lack that kept you in? Or was it a case of, actually, like you just said, I'm friends with this person, and if I don't support them, then that's wrong on me?
Yeah, I think there's definitely both sides. Very rarely have I been in a position where I've sat there and thought, I need this money, and if I can't sell this asset, I'm in trouble, because I wouldn't put, that's one of the fundamental things. If I go to the horses, I live in Cheltenham in the southwest, and we've got one of the biggest horse racing events in the world with the Gold Cup that we have every year in March. And, I go to the races quite a lot, and I'll always take enough that I know that if I walk away with nothing, I've lost what I can afford to lose, type thing, right? So that's the first obvious thing that I would say to people. In terms of the kind of emotional side, I guess there is the two angles. There's I've lost, say I've bought 10,000 Solana, for example, 6-9 months ago. Obviously, I'm going to be significantly down today. Now, the emotional connection to that is I've lost so much money in this deal that I don't want to sell it, because I don't want to sell my 10,000 or whatever I just said for 500 quid, because I'm like, I can't possibly lose that amount of money. But what I'm not doing is now using that 500 quid, for example, on another opportunity that might be able to get me, that I have seen the fundamentals, that I do understand the project, that might take me straight back up. And that's the key for me, is you've got to take away the emotion of the loss and look at the opportunity cost, if you like, which is an accounting word really, or term. But what is the cost of you not taking the next opportunity? And that for me is where I mean with the emotion. Now, obviously, you're going to have friends, you're going to have projects you're connected with, and you might just be in them for that reason. And maybe sometimes you need to stay in and just rough with the smooth, but sometimes you need to tell your friend, look, mate, I've got to get out of this, because it's going to the floor. But I think the key thing is that opportunity cost, and making sure that you don't lose the next one just because you're not willing to take an L on this one.
Wow. I apologize for interrupting, but honestly, it's not talked about enough. I think all of us make those private silent decisions, right, by ourselves. And it's hard for us to actually track it, because, like you just said, you maybe sit there one dark evening, it's 1 a.m. and you look at it and you really want more H bar, but your AL goes down, but you've got a couple hundred in there. And you're like, you know what? I'm going to sell this, even though it's a loss, but I believe H bar is going to go higher, and I don't know when. And so you do that. And this is always the fascinating thing. You see that previous asset, algo in this case, shoot up. Oh no, I missed that move. But then people either don't hold long enough in that one that they just rotated into, or they forget when that one does move that they could have got a 2x with algo, but you did get 20x over here. And if you don't track that, because I've done it, and actually you've really sparked me here, I don't know if it's worked. And so my question to you, Joe, it's a little bit of a selfish one. So coming up to April, let's say our portfolios are still where they are right now, 90% down. Just before the new tax year, is it year, season? What's the right term?
Yeah.
Just for the next tax year, would you say, actualize that loss, right? And rotate your algo into XRP, for example, take the loss on algo, move it into XRP, show you've made a loss, and then if you want to rotate back in, you could the next couple of days.
Well, so I don't want to get, especially after we're already 33 minutes into the conversation, and if people are awake, I'm definitely going to send them to sleep now. But in the UK, and this only applies mainly, I can't comment exactly in the US, but from a UK perspective, the HMRC unfortunately have thought of that and thought, well, I know what people are going to do. They're going to sell an asset to recognize a loss, and then the next day they're going to buy it back. So we have what's called bed and breakfasting rules, and there's a same-day rule and a 30-day rule. So in the UK, we operate an average cost mechanism. So if you buy 10 SOL every month, for example, and it's $1, then $2, then $3, then $4, etc. Each month it goes up by $1. They will average that purchase over, so $120 over the 12 months. Average purchase price, let's say it's $6. That's your kind of purchase price for cost basis. Then what we do is when we sell it, we then obviously deduct the sale price. So let's say it's $12 off the $6, and we've got a $6 gain. All right. Now, what HMRC say is if you do that within a day or within 30 days, they will take the cost basis as the price on the day that you're doing it, or within the next 30 days. So basically, if I say I'm going to sell it today and then I buy it back in 30 days, there is no gain or loss. They just basically net them off together, and they say that doesn't count. You can't do that. So I know that was a little bit technical,
No. That's
but
what we need.
ultimately the only way to get around it. Sorry, Jordan. The only way
No.
to get around it is to wait kind of 31, 32 days, something like that, and then it wouldn't. So if you sold your algo today, bought your XRP tomorrow, waited 31 days, and then went back into your algo, then you would realize that loss and you'd be able to move forward. So some people are willing to take that. Can I wait 31 days and actually the market is going to go sideways and I might be all right? But other people don't want to be out of the game. So it's hard.
And I'm happy to be on the show and say, hey, this is my own financial advice to myself, which is rotating into an asset, which I equally believe in, right? So algo, actualize the loss, so I don't have to pay as much taxes. Store it in XRP. If algo shoots up, hey, good luck to that community. Well done. I'm sat in XRP. Hey, I'm happy. I'll happily take what I believe is going to do that in the future itself. So although I'm like, I missed that pump, well, I put it into an asset which I still believe in anyway. And so it's a win-win. It helped me reduce my profits. I put it into an asset I believe more in. It just meant in the short term, hey, I missed that move. And like you said, if you can hold out for 30 days in the UK, hey, jump back in and start again from that new average price of
new base price. New base cost basis. New cost basis. So and that just for clarity for that, that applies to stock trading as well. That applies. So the share trading rules in the UK are the same for crypto in terms of the 30-day rule and the same day rule. So obviously I'm happy if, shameless plug now, I'm happy if anyone wants to, drop me a line and all those things. I'm obviously happy to explain that in more detail or give some people more specific advice, but that's a very quick 2-3 minute summary of a fairly complex subject.
Yeah. And again, ask your accountants this exact question, right? And the only way you can is if you are prepared ahead, at least in the UK, ahead of your tax year, that you can have time to make those decisions, right? And really think emotionally and logically, do I want to sell my algo and, move it over? Are you willing to wait 30 days? The reward in the short term, it's a potential loss. Hey, decision you'll need to make with the time you have. And thank you, Joe, for helping us find better questions to ask our accountants at the end of the day.
Yeah, no problem at all. Hopefully some of that came through.
It really has. At the end of the show, I always love asking people to subscribe, because if you've gotten this long into the show, that means hopefully we've offered some value. And the more subscribers we have, hey, the bigger guests and the more value they can bring on. So, Joe, one last thing from you. What would you love the audience to remember? And feel free, by the way, to plug what you're doing.
Yeah, I think I would always say to the audience to remember that tax and accounting and all of those sorts of things, whilst it's typically and traditionally been a boring and not very interesting space to be in, and something you don't want to engage with, this is something you should engage with. And there are people like me out there that want to be on your side. I'm in the game with you. I'm talking about some crypto projects today that I'm invested in or I've lost money in and whatnot. And I'm there with you. I'm kind of on the ground with you. So, our team is here to help. So don't hide away from it. Don't shy away from the tax or the, things like that, because it will come and bite you eventually. And you'll wish you'd planned for it when it does. So yeah, do reach out.
And I echo that message. So thank you, Joe, for this free mentoring session.
Welcome.
I thoroughly enjoyed it and gained even more respect for what you do. So goes that saying, thank you for your time, because I know you've got a lot of important people to look after, keep out of jail, myself included.
Get you that dream house that isn't a prison cell.
Thank you. Clear distinction. With that being said, Joe, I will speak with you and your team soon. Everyone at home, we'll see you next week.